Mark Zuckerberg, worth $15 billion, took out a mortgage for a $6 million house. Elon Musk borrowed $61 million to buy 5 properties. Why are billionaires drowning themselves in debt when they could buy everything in cash? The answer isn't what you think. It's a secret system they use to get what is essentially free money. And by the end of this video, you'll understand exactly how they do it. Look, most of us were taught that debt is a 4-letter word. It's that student loan that feels like a ball and chain. It's the credit card bill for a phone that's already outdated. We see debt as a trap. But for the super rich, it's a superpower. It's the single biggest tool they use to multiply their wealth, legally avoid taxes, and build empires without spending a dime of their own cash. I've spent weeks digging through financial reports and historical patterns, and what I found is a tale of 2 worlds. The world where you pay interest, and the world where interest pays you. Stick around because I'm about to show you the 3 hidden strategies the wealthy use to turn debt into a money printing machine. And the third one, well, it's so audacious it's literally called the buy, borrow, die strategy. So, how on earth is a loan free money? It all comes down to a simple battle. Your interest rate versus the rate of inflation. Inflation is the rate at which money loses its value. Let's say it's 3% a year. Now, imagine you get a loan with a 1% interest rate, like Zuckerberg did. Your debt is growing at 1%, but the value of the money you have to pay back is shrinking by 3% every year. The bank is literally losing purchasing power by lending to you. You could borrow $1 million at 1%, stick it in a simple savings account earning 2.4%, and make $13,500 a year doing absolutely nothing. That's the game at its most basic level. But the rich don't just put it in a savings account. This is where opportunity cost comes in. Why would a businessman use $1 million of his own cash to buy a house when he can get a 2% mortgage and invest that same million into his business for a 20% or 30% return? It's not just smart. Not doing it would be a financial mistake. But why do billionaires get these ridiculously low rates? Simple. Banks aren't worried about them defaulting. Plus, by giving a sweetheart deal to someone like Elon Musk, they hope to get his company's massive banking business down the line. It's a win-win for them. Okay, so they borrow cheap. But the real magic is a concept called leverage. Leverage is how you turn a little money into a fortune, almost instantly. Think of it like this. Have you ever tried to lift something heavy? It's hard, but with a lever, it's easy. Debt is a financial lever. Let's say you have $10,000. You buy a product and sell it for $11,000. You made a $1,000 profit. Nice, but not life-changing. Now, let's use leverage. You take your $10,000, go to a bank, and borrow another $990,000. Now you have $1 million. You buy 100 of those products and sell them all for $1.1 million. You pay the bank back its $990,000 plus, say, $10,000 in interest. After deducting your original investment, you're left with $90,000 in pure profit. You just 10 times your money using the bank's cash. This is exactly what the rich do with real estate. Someone like Robert Kiyosaki takes out a mortgage for a $200,000 house. He rents it out for $1,500 a month. The mortgage payment is $1,350. So, the tenant pays off his loan for him, and he pockets $150 every month for doing nothing. When the loan is paid off, he owns a valuable asset, all without using his own money. This strategy is powerful, but it's also why things can go horribly wrong, like the 2008 financial crisis. When Wall Street used too much leverage on risky mortgages, the whole system came crashing down. It's a superpower, but it has a dark side. If you find this stuff fascinating and a little bit scary, do me a favor and hit that like button. It helps tell the algorithm this is a story worth sharing. Alright, this last strategy is the most controversial. It's a tax avoidance masterpiece the ultra-wealthy use to pass on fortunes completely tax-free. It's called the buy, borrow, die strategy, and it's 100% legal. Here's how it works. Step 1. Buy. A wealthy person buys an asset that will grow in value, like stocks or real estate. Let's say it's $1 million worth. Step 2. Borrow. Years later, that asset is worth $5 million. If they sell it, they'd owe a huge amount in capital gains tax. So they don't sell. Instead, when they need cash for their lifestyle, they take out a low-interest loan against their valuable assets. Remember, a loan isn't income, so it's not taxed. Step 3. Die. This is the morbidly genius part. When they pass away, their heirs inherit the assets. But thanks to a tax loophole, the value of the asset is stepped up to its current market price. This means the $4 million gain that happened during the original owner's lifetime is never taxed. The heirs can sell it the next day and only pay tax on any gains from the moment they inherited it. The family fortune stays intact, and the taxman gets almost nothing. Have you ever heard of anything like this before? Let me know in the comments. It's a perfect example of how the financial system has different rules for different people. So, while most of us see debt as a burden, the wealthy have turned it into an engine for growth. They use it to access free money when interest rates are lower than inflation. They use it as leverage to amplify their profits, and they use it to sidestep taxes for generations. The key takeaway is this: debt is a tool, and like any tool, it can be used to build or to destroy. The global financial system itself is built on a never-ending cycle of borrowing. The world is over $300 trillion in debt, but most of that money is just owed in a circle, from governments to banks, to pension funds, and back again. But that's a story for another video. If you want to understand how this global debt loop really works, and who actually holds the power, make sure you subscribe and turn on notifications, because that's what we're breaking down next.